Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. We're seeing a somewhat quiet day in currencies. Factory orders out of Germany missed. Centex investor confidence from Eurozone, that also missed. But the euro didn't really fall apart. We are seeing the dollar hold ground, though, coming from Friday. Now, you look back at the jobs report, non-farm payroll, it was very, very mixed. You had job growth below expectations and zero wage growth. Now, normally that would be something that sends the dollar much lower. However, that didn't happen. If you look back on the week, manufacturing and non-manufacturing from ISM both really were cause for concern, showing the deteriorating growth and really looking at the non-farm payroll. People thought it could have been a lot worse, especially ADP payrolls were revised poorly. So when you look back at it all, the data on non-farm payroll, though it was bad, it was feared to be much worse. And it really, the dollar's held ground. Not only that, you got to take a step back. And we've talking about it. The dollar is in an uptrend. You see it in the dollar index. Dollar index doesn't really show it against the dollar broadly against the rest of the world. But the dollar index, which is bulk of the euro, you have still a very strong uptrend in the dollar index. There's strong support below. 97.5 big floor area, 97.70, 97.80. There's number of levels that are a tremendous amount of support, and then you have a trend line now, 98.25 that we're holding. So there's a strong uptrend here. Yeah, the dollar is a little exhausted, and the reason being it's really not having or finding a catalyst for it to go higher. The data, though poor in Europe and poor around the world, is nearly just as poor here in the U.S. So there is some upside here. We've been talking about it, a trend line going back almost 20 years to 101. If we start to see better data here in the U.S., another strong CPI number maybe later this week, or a less dovish Fed, which I don't see really happening until after that CPI number, that only if it does come in hot. But we're not really finding a catalyst to send the dollar higher. Until then, I mean, we can just continue this slow grind with new highs, fall back, new highs, fall back. But when you take a look at it, remember, the dollar is in an uptrend. So don't forget that. The euro, it's in a downtrend. And resistance levels, you have something 110.80. That's where the trend line is. But then you also have strong resistance with the 50-day moving average, as well as a retracement, right up about 111.5, let's call it. So until the euro can close out above 111.5, or even just clearly close above 112, really, it's in a downtrend for now. And then look at the yen, it's fallen back. It had a knee-jerk reaction to a new high after the non-farm payroll. Then it fell back. Overall, the safe havens, treasuries are falling back just a bit. Gold's taking it on the chin here today, back below 1,500. The yen taking a hit here today too. Household spending numbers coming out of Japan later tonight. Look for that. And then the Aussie dollar. We've had a roller coaster ride today on trade of the U.S. and China and some of the headlines there. But the Aussie dollar is really the one taking in the bulk of the somewhat poured cold water over expectations. It's down nearly half a point. We're seeing that quadruple bottom start to dissipate. Tonight there's some confidence numbers coming out of Australia, so keep an eye on that. And then the Canadian dollar, 75, continues to be a floor. Really just no life coming off that. Building permits numbers coming out of Canada tomorrow, so keep an eye on that. And then lastly, here's the data coming out of the U.S. and Europe, really to move things. Industrial production out of Germany tomorrow. You have Spanish industrial production as well. You have U.S. PPI numbers. Keep an eye on that. It's not as important as CPI, but you do want to keep a pulse on it. And then Fed Chair Powell again tomorrow. So a lot to look at. And remember, China's back from holiday too, so we could see some more volume, a little more volatility, or just some jawboning too. So give us a call. We're here to help with anything on the board, 312-278-0500. And remember, futures trading involves substantial risk of loss and is not suitable for all investors.